Most order block content shows zones that hold. This chart shows the opposite. A textbook bullish order block formed cleanly right after a change of character that failed on its very first test. Price sliced straight through on a decisive close and climactic volume, and the zone was invalidated. It never held once. The lesson is simple and easy to forget. Formation is not validation. The chart opens in a downtrend, lower, highs and lower, lows stepping price down the left side. This establishes the bearish context that everything else forms inside. The selling here is what eventually bottoms and sets up the change of character, but at this stage the direction is firmly down and there is no demand zone yet. That bearish backdrop matters. A zone forming against the trend stands on weaker footing. The downtrend's momentum fades at the lows. The legs shorten, the selling thins, and price begins to base. This is the exhaustion that precedes a change of character, where the downtrend has run out of force, but nothing has yet confirmed a turn. Nothing here justifies a demand zone yet. This is raw material, a base, and a base alone is not an order block. Price pushes up and prints its first higher high, breaking the sequence of lower highs. This is the change of character marked on the chart. For the first time, the market has refused to continue the downtrend. The change of character is what gives the demand zone its definition, turning the base at the lows into a credible bullish order block. Crucially, the zone is defined by this event and forms after it. With the change of character confirmed, the bullish order block is marked. The green demand zone formed from the area price left as it broke structure upward. Downtrend, change of character, demand zone, a textbook sequence. But here is the distinction that defines this chart. The zone has just formed. It has not been tested. It has held nothing. Right now, it is indistinguishable from a zone that holds and one that fails. From a zone, price rallies up toward the bearish order block overhead, making a higher high along the way. The advance carries well above the demand zone, which now sits below, untested. Everything about it looks valid on paper. It formed correctly after the change of character, and price has moved away. The only question that matters is what happens when price comes back to it for the first time. The rally stalls under the bearish order block overhead, and price declines back toward the demand zone. This is the zone's first genuine test, the first time price has returned since it formed. Everything the holding zone reads taught would frame this as the moment the zone defends and price bounces. But this is a brand new zone with no track record. Its first test is its only audition. Instead of bouncing, price cuts straight into the demand zone and keeps going. No defense, no turn back up, no reaction at the level. The candles push down through the zone with momentum on the very first test. The zone that formed so cleanly after the change of character does not hold even once. A clean formation does not produce a clean hold, and the absence of any reaction is the tell. Price closes decisively below the demand zone, and the order block is invalidated, marked directly on the chart. This is the event that matters. Not a wick below, not a brief poke, but a clear close beneath the level on its first test. The distinction between a wick and a close is everything. A wick that closes back inside is a messy hold. A decisive close below is the zone breaking outright. Look at the volume panel beneath the break. A large red bar, among the heaviest on the chart, prints exactly as price invalidates the zone. This is not a quiet drift through the level. It is an aggressive high participation break. The volume confirms it. The selling overwhelmed the untested zone with force. A climactic break shows the pressure was real and concentrated, which is why the move that follows accelerates rather than stalls. After the invalidation, price does not stabilize, it accelerates lower. The break removes the support the structure had implied, and the markdown extends rapidly below the failed level. The zone that was supposed to be a floor became the launch pad for the next leg down. A fresh zone that fails decisively on volume can do the opposite of what its formation promised, the break itself becoming a source of momentum. 3 things to carry from this chart. First, formation is not validation. A fresh order block can fail on its very first test. In a textbook sequence, downtrend, change of character, demand zone produced a level that did not hold even once. Second, a zone's track record matters, and an untested zone has none. The number of times a zone has defended itself is information, and a fresh zone's count is 0. And third, invalidation has a signature, a decisive close below on volume, with no reaction inside the level. If reading charts this way is useful to you, subscribe to SMC Chart Sense for a new chart read every week. That's the best way to keep these in your feed.